charting. He loses sometimes, but hardly he's BTC Charlie. But now he's GBP.
There is no second best. There is no second best crypto asset.
What he's charting. His trading is tough, but it's not all that bad with Charlie. He's got memes in the morning and more in the evening. It's Charlie. And when trading gets hard and support starts to lean,
There is no second best. There is no second best crypto asset.
All right, ladies and gentlemen, boys and girls, good afternoon, good morning, good evening, wherever you might be. How's everyone doing on this fine FOMC day, my macroeconomic experts? We all winning? We all balls deep in dogshit altcoins? Ready to get our asses handed to us? Or are people a little bit more sensible? Resisting temptation. that's probably the best way of putting it, isn't it? So yeah, I'm joined by the legend MacroCRG. We'll get him on in a minute. I'll give you a quick rundown of my views to start with. We'll just take a minute or two to do that before I start grilling him and take the what's it called, the like Parkinson seat.
There is no second
And start
best
asking
crypto
questions,
asset.
asking the tough questions. The people demand answers. The last hope is that Mr. Powell may also have an open Doge position. Yeah, I heard Powell is actually balls deep in Doge.
There is no second best.
But yeah, I mean, I'll talk you through my stance on it very quickly. I'm risk off going into it. I have one position open, which I don't mind sharing with people, and it's not a hindsight lap because it's a fucking terrible position, and why would I lap about it? I was literally just playing a continuation long on BTC spot position, which is the first time I think I've had Bitcoin in a long time. And yeah, you can see my entry. You can see that my actual stop on my original chart was about here, but when I came to FTX, I put it a bit lower, and Sam didn't liquidate me, so I've still got my spots bag. I'm still riding it. If it gets wicked out and stopped, I couldn't really give a fuck. I'm so tired of trying to micromanage potential swings that yeah, it's just it's going to resolve one way or the other. And in the meantime, I've had lots of very successful trades on things like Doge, which was absolutely wonderful. I think everyone played the meme triangle, didn't they? What have we had? CHZ as well. CHZ has been nice, and sushi absolutely ruined sushi. So if any of you follow my style of trading and have looked at this recently, it's actually been pretty easy to pick some of the stronger coins out and look at narratives and find strength, because really I think we're at this strange point in the market where there's kind of two things going on. One is only 20% of coins are really actually strong and stand out, so it makes it easier to decide which ones you want to play if you want to be, intraday trading. And the other thing is that we're kind of all sat here waiting for today, right? We're waiting for some old man to come out and say 50, 75, or 100, and then that's going to define our trading and investing for the next however long, which, to be honest, isn't the shitcoin plethora that I thought I was signing up for when I joined crypto. But yeah, there we are. I'll ask one question to you guys, the audience, first, before I get CRG on, and just say, are any of you actually positioned going into today? I've just gone over my position, but are any of you balls deep in a short, balls deep in a long, or anything like that? I'm just interested to hear from people who have like max conviction going into something like this. Old white men controlling our erections as per. Wow. I mean, I don't want to look at your search history on Chain Cat. Fucking hell. Flat out. Hello, Nicky Stacks. Little long in BTC. Long Bitcoin from 2580. ETH long from lower, but ready to cut if I need to. I will just quickly do ETH, only very quickly. because I had basically this as an invalidation for my kind of ETH bullishness. I wanted to see, this bounce continuation move up, or at least consolidate above, and we haven't. Like, if anything, like I'm not taking a position, but something as simple as that, I would be more comfortable in. But we'll see. Trading into this is just kind of like, it feels like a very 50-50 bet, and low time frame tick chart scalping might be good fun. Might be worth it for some people. But yeah, please don't forget to do a video about my spaghetti trading. Yeah, it's on my list. I've just kind of got to get my tax shit sorted before I go to prison. But yeah, without further ado, I'll introduce my guest, and any questions from you guys as we go through the stream, just shout them in chat, and what we'll try and do is answer them as they come along. So, Mr. CRG, I will unmute you, sir.
Hello, Charles. Can you hear me?
I can. Can chat here?
I can. Can chat here? Wow, there's a decent lag on there. I think
I think you've got, yeah.
It's a big lag.
If you turn the stream off.
You've got, yeah. How are you doing? If you turn the stream off. Ah, is that why?
Yeah, turn the stream off, and then you will not hear me twice.
What about now?
Low, apparently.
Can you hear me?
Yep, we can hear you, just low. Let me just turn you up, sir.
Turn me up, please, Charles.
I will turn you up. Right, try again.
Yeah, can you hear me? Is that all right?
That better, gang? Sound test, 1, 2.
Can you hear me? Is that all right?
Good, better, nice.
Fantastic. Hello, everyone. Hope you're all well.
I think everyone's balls deep in cash at the moment, from the sounds of it.
Yeah, I think. Oh, can I just say that's an awful trade, Charles? My God.
Yeah, that's why I loaded up the stream, mate. Roast my trade, fucking come on.
Yeah, no, you've right idea, but yeah, that is an awful entry.
Yeah, it was. I mean, I should have cut it sooner, but I just got so distracted, and the original idea is kind of not invalidated, but I was chatting to Marusha actually the other day, who said like time often invalidates your theory, and I really like that concept, but I've just not put it into practice for this particular trade. I think I'm actually just quite smug with my alt gains and riding some euphoria, so I'm giving it back to the market via a BTC one, to be honest.
Yeah, absolutely, man. I mean, I really like the way you track altcoins and the outperformance and stuff. And yeah, Doge has been a beauty. I haven't been trading Doge as much, but yeah, if you nailed a couple of Doge trades, then like a Bitcoin trade, it's like a couple of percentage on the stop loss. It's no harm, is it? No harm done.
No, not really. It's quite different. But how about you, man? How have you been? Have you been trading the current environment? Yeah, what have you been up to?
Yeah, so I was balls deep long when equities nuked the lows, when S&P 500, it was about 3,500, 3,550. So when they did that, I was getting balls deep Bitcoin. So I thought it was an important low. Got stopped a few times trying to manage it, trying to get size for the breakout. And yeah, no, I caught it. I caught it well and closed it about 20.6, 20.7K. So I'm just kind of averaging into another long now, which not ideal timing with FOMC later. But to be honest, I think the market's absorbed so much hawkishness over the last month or so. And with tech earnings, I mean, we had the worst tech earnings week in history, I believe, with obviously Amazon down 20%, Facebook down 30%. So, and I mean, markets are just still risk on. They've been absorbing everything and going up. So, fingers crossed. Obviously, you can't. You got to expect some whipsaw action, but yeah, I think hopefully markets still want to go up. So we will see.
So hang on a minute, you roasted me for my trade, but you want the same trade, but just a better entry.
Yeah. I'm only joking with you,
I
Charles.
know, mate. I
Come
know.
on now. Come on now.
So what's kind of making you want to enter long pre FOMC out of interest? Only because I'm quite hesitant to talk about next trades and all that kind of stuff until today has passed. So what made you sort of open a little bit here?
Well, my kind of ethos for the last couple of weeks has simply been to long into midterms because equities have been absolutely obliterated all year. And yeah, no, coming up to midterms, that was simply my ethos that markets are going to rebound into it, which has happened. And I don't know, I just think that interest, obviously, we've seen interest rate hikes all year. And we're near the kind of the 4%-ish target. And I do think it's priced in. I mean, obviously, anything can happen. And I do think that when equities do eventually stop going up, they are going to have a very deep pullback. That could start today. They could have already topped, who knows? But yeah, I think the Fed are just taking the foot off the accelerator a little bit. Everyone says, wait for a pivot, wait till something breaks. I mean, the bond market has been obliterated this year to such an extent. It's the biggest wealth destruction in history. I mean, the never-ending bond bull market has 20 years of gains have been wiped out. So after the Bank of Japan intervened twice, after the Bank of England intervened, I think the Fed are kind of like, shit, fucking hell, we can't let yields go any higher. So yeah, I don't know, just longing made sense a couple of weeks ago. And now I'm not sure whether we still go up or not. I don't have as much conviction. But we'll see. We'll see.
I guess, what kind of you talked about bonds and you talked about macro news and stuff around Bank of Japan, Bank of England intervention, etc. What kind of charts are you looking at to help you gauge market sentiment around equities? Bearing in mind that I basically look at NAS and S&P and that's it. I'm not really.
Do you want me to?
Share up.
My screen. Okay,
I'll just through the magic of Streamlabs.
Has that worked?
Not yet, sir.
Bear with me. I've got to press the share button.
There we go. Look at that beautiful transition. Smooth.
Okay. So, I mean, first of all, for intraday, Bitcoin's holding the 1 hour 200 EMA. What I like to do is have S&P and Bitcoin up next to each other. Bitcoin is showing strength here as the S&P nukes. Now, I've got 3820 as a key support, which I think line will make Boeing. So I'm not too sure, but I'm comfy being long. I'm long Bitcoin from somewhere down here from the 12 hour. Yeah, see there, this 12-hour breaker. I'm long from there. They're tweeting actually, so I'm not laughing. But yeah, so we'll see. But in terms of what I follow, so generally in equities, S&P 500, NASDAQ, Dow Jones, the IWM, which is a Russell 2000 ETF, small cap stocks, they've been outperforming recently because normally if the market's nuking and the boys, the plunge protection team, if they want to save the market, they just bid Apple because Apple's 20% of the NASDAQ,
Yeah.
But recently, when the markets, obviously when we had the terrible earnings recently, small caps have actually been doing really well, which shows a wide breadth to the market, which is actually pretty healthy. Big caps down, but the wider market's has been doing well. Now, so small caps against the NASDAQ or against NASDAQ ETF, coming up to golden pocket and the 200-week EMA. I think it's simple moving average. But yeah, I think large caps might start outperforming now. But sorry, going back to your question. TLT is the main one that I follow to gauge the general health of the bond market. Let me just get rid of this. And it looks all right, man. Like if we break out of this trend line, and it looks fine, because it was, I think, 12 out of 13 weeks were red. And that's kind of down here was kind of where I was saying, right, we've got to start looking for upside. Because look at this chart, man. Like the bonds bull market going back to the 90s nearly, it's all just wiped out. And as kind of Bank of Japan, Bank of England intervened, it's not going to go down forever, is it? But yeah, and also the 10-year US 10-year yield. That's important because yields and stocks are inversely correlated. It's staying up there, annoyingly. But what risk markets want is kind of a move down here. So it really comes down to whether yields have topped or not, and maybe at least for the next month or so. If they have, I'm happy exposing myself to risk crypto.
Yeah, no, that makes sense. So you're not thinking, you're not positioning for like long-term, 6-month yearly holds. You're trying to just go, okay, I'm going to risk on for a bit, see what happens. Presumably, we're not just going to completely retrace that yield on, that push on bond yields and, make it look like a BSC shitcoin chart. You're just short-term, there might be a relief rally.
Yeah, basically, but I did over the last kind of month, I did start to position myself into some altcoins, because the way I view altcoins is, right, if they've been hit so hard, some of them are a 30x or a 50x back to the all-time high, and the risk is just losing it all. So it's either it sounds daft, mate, but it's like, say you put, I don't know, $1,000 into an altcoin, you either lose it, or in a couple of years, if it goes back to an all-time high, if it's a good alt, produces revenue, all that jazz, could be a 30 to 50x. So I don't mind having some altcoin exposure right now. And here's an interesting fact. The average S&P 500 bear market lasts 289 days. Now, the current one from peak to trough was 282 days. Mm-hmm. So I do think, obviously, inflation and everything, and I don't know, the everything bubble, like you've still got to be careful. I don't think, I'm not sure if bottom's in for the year. I think at some point next year, or maybe this year, maybe tomorrow, I don't know, but we're going to see a lot more pain, I think. But I mean, when everything's down so much, altcoins are down 95%. If this is the bottom, which it probably fucking isn't, mate, let's be honest. But what if it is? I think it's just a matter of being prepared. So if the market goes up, you're in a good position. If it goes down, even better. You're in a position to kind of, number one, you don't get fucked, but number two,
no, completely. I mean, I like it because from a psychological perspective, I've always got some exposure to crypto, right? I've always got some spot bags. Like I've held some Rune from whatever it was, like $20 at the top, which I bought much earlier, but I held it from that to now because I always want some exposure to crypto just so I don't get that whole FOMO, like I have to buy something and be exposed. Because if I wake up tomorrow and the entire market's up 10x, like God knows why it would be, but let's just hypothesize for a minute, at least I've got something in the pot. With your sort of 1K entries, let's say, or, an amount that isn't necessarily meaningful to you, are you prepared to just ride them down to zero and fully write them off then? Is that like your strategy?
Oh, absolutely. Absolutely. Like investing in altcoins in general, you either, I mean, if it's not a trade, if it's an investment, you've got to be willing to ride it to zero. Well, I guess it depends where you buy it. I mean, if you buy them right now when altcoins are down 90%, the risk is obviously going to zero, but if you pick your altcoins right, they're not going to go to zero realistically. So what's the risk? Another 50 to 70% nuke. As long as you're not putting life-changing money into it, then I think the risk to reward is there. If you're looking with a 2 to 5 year time horizon, and I think everyone so many people are bearish and shorting, but I mean, Ethereum's just pulled off a monthly bullish engulfing. So's Bitcoin. So these, like, I got levels, monthly level, weekly level. Bitcoin, Ethereum, both closed above the previous month's open and close. Dow Jones, look at that monthly candle. I mean, I'm not saying that we're going to all-time high. We're definitely not. We're still fucked.
I like that. We're still fucked.
We are still fucked. But I like the idea of a bit more upside now, because I was long and I kind of closed out, so I'm now getting back into a long. If we kind of turbo nuke, I mean, for me, if we get back below this monthly level, 19.4K, like if we close below it, any kind of acceptance, I mean, the rally's done, absolutely done. But until that happens, I don't know. I think we've seen. Oh, bear with me a moment. Let me just get this up. Yeah, for anyone positioning themselves into FOMC, I'd be careful of these equal lows, these equal highs. One of them's probably getting taken out.
Yeah, maybe both. Maybe both. Maybe we see the classic Arthur Darth Maul and the Wee Woo comes out, and the liquidation fund gets a nice top up.
Exactly. I mean, fucking anything can happen. That's why if Bitcoin nukes down to here now, I'm not going to be fucked. It'll be a 1-hour loss, which I think a lot of people are just getting balls deep and trying to bet the house on a big news event. It's not really worth it. But
yeah,
the way I'm viewing this range, let me see. I mean, it's a legit breakout of value. So this is the range, the value area. We've broken out of it and we're holding above it. So I don't really get why everyone's bearish. Everyone's trying to short it. I mean, they might be right. We could turbo nuke, but I don't know. I just like the idea of a bit higher, but we'll see.
Yeah, no, that's fair, man. I mean, that's part of the market, right? That's part of trading. Move all our views, and then we put our money behind our views in the market. I think there's a couple of really interesting things that you said. One of them is if things go down further, then that's great because I'll just buy lower. And it's one of the sort of strategies or thought processes that like XO has that he gets a lot of shit for in terms of being like a bear. But actually, if you think about it longer term, if you can buy Bitcoin at 6K, and I know people are going to be like, it's never going there. Like, who knows? It might go to 6K, it might go to 600K. Like, none of us fucking know for certainty, right? But if it does, like, the RR on that trade is going to be, or on a long-term upside bet, it's going to be great, isn't it? Like, surely, like, I fully believe that there's going to be another cycle, and I fully believe that there's going to be a, or at least a risk-on environment for crypto, and I think it's going to look different to the one that we've just had. So I think the one that we just had was like, yeah, as you said, it's the everything bubble, right? And basically everything pumped. I think the next crypto cycle that we have, or the next crypto bull cycle, is going to be a bit more like the legit projects that you mentioned. It's the one with cash flows. It's the ones that generate revenue. It's the ones that are like blue chip. And some of them can emerge from low caps, right? But I think it's going to be a bit more 80-20. And I think it's 10% of the blue chips are going to be like where the vol is, and 10% of the actual trash coins, the meme coins, whatever has a really strong community will probably go parabolic as well. I mean, what's your kind of take on what a next cycle would look like?
Yeah, I agree with every word you've said. People that say kind of crypto's never going to have a cycle, I mean, come on. Like, even like, I mean, remember the meme kind of the meme stocks like GME
Yeah.
and all the other ones, Tesla, that Nikola one. I mean, stocks go crazy, penny stocks, and I'm a big advocate for the uranium market.
Okay.
I've been a uranium holder for about 3 years. So, and even some of them have done 10x, 20x, and crypto is like it's high beta stocks in it, but it's a new emerging sector, and I think. Let me just see. Bear with me a moment. Yeah, so the entire market is under 1 trillion as a market cap, and I just think that it's got so much room to go higher. And like if you look over kind of 5, 10, 20-year time horizon, yeah, absolutely. And regarding the altcoins, yeah, I mean, majority of altcoins are never going that high again. Like take for example, Axie Infinity. I don't know much about it. I'm not saying it's not going to go back up, but when you compare the revenue, because it was very, very hyped and it was doing insane amounts of revenue every day. I saw a tweet the other day, revenue per day is like hundreds, I don't know, something really small.
I think it's like $17,000, isn't it, or something like that?
Yeah,
it's like
yeah.
literally nothing.
So if projects like that caught onto a massive hype cycle, if they kind of don't deliver, then I mean they might. I mean, all decent kind of altcoins on, let's say, Binance will, because rising tide lifts all boats, doesn't it? So the algos will catch on. But yeah, I mean, if altcoin projects, it's got to have some revenue. It's got to be sustainable. It's got to have like people with backgrounds on it, because managing a treasury, it's not easy. I'm not that I've done it, not that I manage an altcoin treasury, but like having to kind of, you pay your staff every month, and say a project raises $1 million, $5 million. I mean, how much runway are they going to have before they have to say, right, guys, we're done, we're out of money?
Yeah, no, I get it. Like, I mean, look at the funds blowing up, look at everything else. Like, it's just absolutely phenomenal. And why, like treasury manager as a kind of meme role, well, actually, it's probably one of the most important roles in the entire business. And clearly, plenty of people fucked it up. We saw it in 2017 with the ICO raises all in ETH. And people then kept all the ETH and then gambled all the ETH. And, we saw it again in 2021, didn't we? Like, exactly the same, history repeats itself. And I think at the end of 2017, like, I wasn't involved in ICOs particularly, but everyone said that ICOs are dead. And then in 2021, it's launchpads and it's all of that kind of wonderful stuff. And in next cycle, I'm sure it'll be exactly the same, but under a different branding. There are going to be new people coming to the market with new ideas, and new people wanting to participate in what is probably the greatest potential speculative Ponzi in the entire history of humanity. It's a big casino.
It is a big casino, and humans are greedy by nature, thinking that there's not going to be another crypto cycle. Like people say, oh, Bitcoin, the reason for the pump in 2017 was the hard fork from Bitcoin Cash and all that. And then, the reason it went up in 2020 was because the Fed, something's always going to pop up, because crypto is a big casino.
Yeah.
And because Bitcoin's down like 90%, let's say what I think, I mean, could be completely wrong. And if I am wrong, I'm not going to lose much money. So I think that kind of, because when equity is, let me see, I like this kind of range on the S&P 500. So we take it from there to there. We had a big fake out and then pump, and now we're at mid-range. So I think that, to be honest, I think whatever volatility happens after FOMC, I think we go up higher into midterms. Could be wrong. Absolutely could be wrong. Could turbo nuke to new lows tomorrow, but this is just what I think. And then at some point, it might start today, who knows? At some point, we're going to get a big pullback. and we're going to come back into here. And I don't think we're going to nuke straight to new lows. I think maybe next year we do. But what was the point I was going to make? What were we talking about?
We were just talking about cycles and gambling, and essentially, crypto being a big gambling pot.
All right, I have no idea where I was going with this one. I had a point there.
That's right. I'm sure it'll come back to you at some point.
I have no idea.
I mean, I've got a question about your kind of earlier stuff before I then ask you about, your journey in crypto and all that kind of wonderful stuff. You sort of mentioned about, rotation into small cap stocks and all that kind of wonderful stuff, and the mix of, okay, well, they used to bid Apple to prop up the NAS, and now actually there's been quite a movement up in, well, exactly the chart that we've got in front of you. Like, do you use that as a risk-on proxy for crypto in general then? Because I've not looked at the correlation between like this and S&P and BTC and like alts, but if you look at that, and then perhaps compare it to like the total 2 market cap, which is total crypto excluding BTC, like, is that kind of a similar pattern? Because I'm always interested in like how beta correlates between altcoins, but I haven't really considered it between markets personally.
Not really, no. I'm not going to lie and say that I do. It's just something that, like, this is just something that I've been watching because obviously recently when the mega caps were turbo nuking, but the market was holding up. It was. I noticed the breadth that the market had. So I do look at this, but I kind of just look at TLT and the 10-year.
Yeah.
And
that's fair.
Yeah, to kind of see risk on or off. But can't really answer you there.
Oh, that's fair, mate. That's a Parkinson question. I like it. I'll take a +1 point for that to offset the poor trade.
I think also I can add a little bit of value here. I think with the dollar. So I've got my main weekly level is here, just above 112. If the dollar starts breaking above this and starts looking bullish, I'm going to be out of all longs, crypto and otherwise, because that'll just tell me that it's ready for next leg higher. But at the same time, we've kind of just watching price locally. We've made, let me see. So we've got a kind of lower low, lower high, lower low, and price is kind of at mid-range. I like lower in the dollar, and this is a big proxy that I use to know whether to kind of risk on or not. Okay. So if the dollar breaks above here, then I'm gonna say see ya, get out of my longs. But again, I do like lower, and I'm in a couple of dollar shorts, which they're not looking good, I don't think. Oh my God, yesterday, right? posted that I longed kind of euro and the pound, immediately nukes. Like within fucking minutes, price was nuking. I think I'm a bit underwater on these. I might close them before FOMC, but for me, it's make or break for the dollar here. So if we are going to get higher, I think these need to bounce. And again, if we look at the monthly candles, big green monthly candles, and so again, and look at the pound, the way cable kind of took out this low, deviated, and is back above it. So
that was a beautiful day. I cashed out a lot of dollars on that day.
Hey, it's good, isn't it? Getting paid in dollars from living in the UK.
It was great.
But so I think we really are. It is make or break for the dollar. It's time to pay attention, mate.
Yeah, I mean, I think I started the week doing like an overview video, and I sort of mapped out some trades, and I said like alts are on some amazing levels. There's some really clean, nice setups. Like, it's going to be a big week either way, like regardless of FOMC. And I think I recorded it at 9 o'clock Monday morning. I think by 4 p.m. Monday Monday afternoon, everything had played out and was either invalidated or went straight to did what I said it was going to do. Which it's A, nice to see volatility in the market, but B, it's like, wow, okay, like this week is genuinely quite big outside of just FOMC. It's big for the dollar, it's been big for some altcoins like particularly Doge, Sushi, etc. Yeah, it's wild, and it's nice to see it again. It's nice to see consistent trading opportunities, I think, because I don't know, I don't remember it being this volatile like a month or two ago. My concept of time is pretty terrible, but I don't know about you. Are you feeling it like easier, or not easier necessarily to trade, but more opportunities being given to you? Because, I see you're obviously trading Forex as well. Or has it always been busy for you?
Yeah, no, I absolutely agree. I mean, when volatility dries up in FX, my God, it's boring. I mean, if we get Euro up, obviously the big moves we've seen this year has been great kind of trading opportunities. But if we go back, let's get weekly chart up. I mean, look at this weekly range. I mean, that is just painful, isn't it? So from June 2018 all the way through to May, it was just pinging in this channel. And let's see, I mean, if you were lucky, you'd see, oh, wrong one. If you were lucky, you'd see like a 2-3% move, and then it's just reverting back. So, and then, I mean, look at this volatility, 16% in the euro, up, and then down 22%. So that's why I don't think that a little bit of mean reversion here is completely out of the question. And again, that's all I'm really looking for, because the main trend is down across the board. We're still in a vicious bear market. While inflation has ticked down very slightly 3 months in a row, it's still seriously high. So yeah, we are still fucked, but at the same time, a true bear market fucks the longs and shorts. And interesting, let me see. So what I'm kind of looking for on SPX, this is a key support here, 3,800. And then I kind of think 3,750 is kind of make or break, smash below there, and things are not looking great at all. But the top of the channel coincides with that's the EMA. The 200 moving average is closer to the top of the channel. It's like that. So I think as long as because Powell's either going to do 75 basis point hike, which is, I think it's 86% priced in, something like that. He probably will do that. But I've been hearing from a few people that he might go with the 50. I'm not acting on it. It's just word on the grapevine.
Yeah, word on the grapevine. I'm hearing things.
No, but I'm hearing from like some of because one of the big things about spending so many years kind of addicted to the market, you kind of you learn who's good, who's not good, who to trust, and it's a few people who I trust a lot are saying that there actually is a chance that he might go with 50. I mean, I'm not betting on it, because the chance of, I mean, I think statistically, I don't think the Fed at least in the recent years, I don't think they've ever, when the market's pricing in one hike to such an extent as the 75 is priced in today, I don't think they've ever gone above or below in recent years, that is. So I'm not betting on it, but they either do the 75, but I think they're trying to take the foot off the accelerator for midterms. So they're not going to try and nuke the market. I think it comes down to whether Powell says he's going to wait and see, kind of just hopes that inflation's come down, because they've hiked a lot. They're getting close to 4% Fed funds rate, you know. So a lot of hikes have happened, and it takes, I don't know, 9 to 12 months for rate hikes to kind of to get into the system and bring inflation down. So, I mean, inflation should start coming down a bit. It's obviously not going to come back down to 2%, but I think it is going to start coming down. So he's either going to have a neutral tone and say, well, we'll wait and see, or he's going to be a turbo hawk and he's going to say, no, we're still doing whatever it takes. So that's probably going to determine what happens in the short term. But say we do nuke down here, if we can reclaim here, I do like a bit higher, maybe 4 to 4,100 before a significant pullback. But yeah, we'll see.
Yeah, we'll see. It's going to be interesting, and at least we'll have our answer in a few hours. Do you know what I mean? It's are you tempted to scalp it on like low time frame, or you just you ever tempted to load up a little account and just try your luck?
Nah, don't. Too old for that, man. I've got grey hairs now. Can't be dealing with that stress in my life. To be fair though, like I've got some levels mapped out. I think if we have a look, let me see. So this is the liquidation levels heat map on Bitcoin. So let me just bear with me a sec. So these are the people that are probably going to get hunted today. So as you can see, yellow is a lot of bigger positions. So we've got down here, which is around 20,000. And then we've got lower than that, 19.7. But I think we've got that. So there's a lot of long licks down here. And that coincides with my monthly level and these equal lows here. So I think if we do see a big nuke down here, I might punt a little bit, you know, and see what happens. But yeah, I mean, it is risky. And then on the upside, we've got 20.7 and higher than that, 21. So again, on the flip side, we could just do that. And then that, I mean, who knows? It's one of them, isn't it?
Yeah, no. I occasionally, for these kind of events, I kind of tweet out, you know, give me your best doodle, because everyone's just fucking guessing, right? You just literally load up a 1 minute chart, blindfold yourself, hold the button down, and wiggle the mouse and see what comes out, basically. And I think that's probably just as good a strategy as most people have got in this. Please draw a squiggle arrow, sirs. I'm going to go all in on that one. Don't joke about that, because someone actually did it, and they literally sent me a screenshot of their trade and said, I've liquidated my last $500. Yeah, then DM for refund. That's exactly what someone did. Oh, you know. That wasn't you, was it, Ponzi? On an alt account. It better not have been. But yeah.
I've got a funny story. I remember I've got like a free Telegram. I don't really post in it much anymore, but yeah. I think it was back in 2020. I kind of set it up and I was putting loads of effort into it. The very first chart I put in was a high time frame Euro USD chart, and just to give a bit of I don't know, overall view on the market. It was like I think it was a weekly chart. And someone, about an hour later, someone messaged me on Twitter saying, I just took your signal and got liquidated.
Oh, God.
And oh my God, I was like, oh, man, why are you going balls deep long on a weekly time frame chart? Yeah. Some people just can't be helped. I mean, it's one of them, isn't it?
Yeah, no, it really is. It really is. Sometimes you just go, well, if it wasn't going to be me, it was going to be someone else, wasn't it? In terms of that they would have copied and done whatever with. You just can't, like, account for everyone. I'm putting that very politely. But yeah, so how did you get into the casino then? What made you get into crypto? Because you said sort of 3 years ago you were piling in on uranium. Was that pre or post crypto?
So that was crypto. I opened my first trading account in, I think it was 2016. It was for the Brexit vote. I have no idea what I did, what happened. I probably put 20 quid in and lost it, and I don't know. But I started properly trading in Q1 2017, and it was stocks. It was tech stocks like Google, Facebook. And I remember on the broker that I used at the time, Trading 212, I just saw Bitcoin, and I think it was just when Bitcoin broke $1,000, and I just punted a bit, and it just kept going up. So I punted a bit more, and after a few days, I was in awe of this asset that went up all the time. And then obviously went in the rabbit hole, found Ethereum, found altcoins, and the rest is history.
So how did you do okay that cycle then? Did you capture, did you get involved in time for the 2017 bubble and death of Bitcoin and death of crypto?
Yeah, I did. And it was probably the worst thing that I could have done. Well, not the worst, but I made a killing in 2017. I really did. I fearlessly rode Bitcoin with leverage and altcoins on spot, Amisago, Neo. I fearlessly rode them all the entire year. And obviously I thought I was a genius, and 2018 humbled me significantly because of that.
Yeah.
But yeah, it's one of them, isn't it?
Oh, well, that was my experience, not too dissimilar to yours, but a little bit later. I think it was August 2017. I bought my first couple of Bitcoin on local Bitcoins, and sent those over to Bittrex. Next day, I was up 100%. I was like, well, this is fucking easy, isn't it? And that's it. You get kind of hooked. And then the 2017, the last few days of December or whenever it was, when Bitcoin just flew up to 19.8 or whatever it was. Yeah, it was like, well, this is clearly going to infinity. And then personally held a fair bit back down, minus 60%. But I think you kind of, well, I guess, what's your view on, do you need 2 cycles to quote unquote make it?
Oh, absolutely. I mean, regardless of kind of making it, because people have different definitions, don't they?
Yeah.
I think 2 cycles to understand the amount of respect that you need to show the market, because the market is brutal. It's, if you don't show the market respect, it's gonna fucking destroy you. I mean, it's like if you sit at your desk 10 hours and you're waiting for a move, you go to the toilet for 2 minutes and the move happens. Like, the market knows you. It knows you inside out. It knows what personality you've got. It knows your weaknesses, and it will exploit them. So yeah, I think you need obviously 1 cycle to learn the ins and outs of execution and to know mentally kind of what it takes. And then you need a vast humbling experience to teach you how to respect the market. But it's an ongoing thing. I've been kind of balls deep in the market ever since I started, and you get humbled again and again and again. It's just a part of the process. All you can do is make sure that you lose less money each time.
Yeah, I mean, I like a quote that I'll use ironically, given who it's from. But manage your risk, or the market will manage it for you. Suzu, or 3AC liquidated fund. It's a great quote, even though if he didn't abide by it himself. But yeah, it always sticks with me, and it's like, that's probably the most eloquent way of putting it, in terms of, well, if you're exposed to the market, you've always got to decide how much you are exposed to it, and it's down to you. And yeah, people say, I had a question actually from someone this month, and he was sort of saying to me oh, are you profitable every day? Are you profitable every week? And the answer is no. Some weeks you have a bad week, right? Can you survive losing 5 trades in a row? If the answer is no, then you're massively mismanaging your risk. but sometimes the market doesn't give you opportunities to take any trades, or it gives you one opportunity and you lose it, and that's it. You're down for the week. Well done. Like, do you know what I mean? It's a very weird mindset, and it's a very weird job, I think, in terms of how many people go to work in a normal 9 to 5 world and come home from work poorer than when they started. Like, it's weird. And I personally think that the psychological battle is probably harder than a lot of jobs and a lot of ways of making money out there than most people realize, I think.
Yeah, no, 100%. Well said. I mean, what other job can you sit at your desk for 10 hours straight, do everything right all week, and then lose money? You know, it's fucking brutal. And I think one of the most important things that I've had to learn, because I can just spend 10 hours straight with in the charts, you know, and kind of get lost. But you've got to have that time away to let your brain kind of digest the information. Like, for example, I do my best to switch off on the weekend. Doesn't fucking happen. Doesn't work. But I mean, every now and again, like I'm pretty burnt out right now because didn't sleep much when Bitcoin was kind of in this area, because I was trying to catch the long. But now we've kind of broken out and we're holding. I mean, we've got FOMC today, NFP tomorrow. I mean, Friday, which jobs data. So I think we'll get a better sense of what market wants to do. If Bitcoin nukes down here and stays down here, rally's probably over. But yeah, this weekend I'm definitely gonna smoke a big joint and go for a walk on the beach or something, because you need that. I mean, trading is so consuming that you just get lost. You get lost in it, and it's so important that to have that time away to let your brain breathe. You know.
Yeah, 100%. I mean, I try and do the same in terms of like, I try and have the weekend off because I've got a daughter, she's young, a wife as well, you know, so they kind of want to see me at some point. Whereas I think if I was a single man, I'd probably just, yeah, be completely addicted to the market. Now, whilst I check my phone every now and again and shitpost on Twitter on occasion, I certainly, I can't remember the last time I traded weekends, to be honest. I pop on the odd position on a Sunday night, a quick in and out, but yeah, it is important to take a break, but equally, it's quite difficult to switch off.
Yeah, so you're a proper adult then, Charles, with a kid and a wife and a mortgage and everything.
Oh, I don't know about that.
Proper adult.
But I mean, yeah, I'm kind of at a stage where I have to pretend to be responsible at times, which which is interesting. But I don't know. I don't feel any different than I did when I was 18. Do you know what I mean? And that was quite a while ago. So
I get that.
not too old, but you know, early mid-30s is what I'd describe myself as.
Yeah, I think I'm still waiting for S&P to touch 3820. It's annoying that it's not, but yeah, I really like how crypto's holding up. I mean, how many touches of that moving average have we seen now? But definitely, especially if you look at the Nasdaq, definitely, because the Nasdaq is turbo nuked. Bitcoin should have broken down by now. Absolutely should have broken down. I think Ethereum here is just taking out a key low. It's holding. You can't see it there, but that's a monthly level. It's holding this. Yeah, I think get above here. That could be a nice little long up to there. But we shall see.
We shall see.
Boring day today, isn't it?
I know, mate. I know. I mean, I think on Spaghetti, the only thing that moved was Litecoin, which is like, fucking hell. You've really picked today of all days to send Litecoin. Like,
I know, it's dangerous, isn't it?
You know, is that the budgie in the mine? You know, someone said to me this morning. Do you think that means? Do you think that means it's the end of this rotation? And I'm like, I don't know. I don't see Litecoin move like that very often, and I think everything's just going to be dependent on later. So if the market nukes, then everyone will be like, oh yeah, Litecoin was the signal to get out and risk off. And I think that's kind of apples and pears. Do you know what I mean? You're using something as a proxy or a signal for something where actually it's not the cause.
Yeah, I agree. Everything's obvious in hindsight.
Yeah.
Like if we had nuked last week when we had the worst tech earnings week in history, everyone would have said, "Oh, of course we nuked. Look at the earnings."
Yeah.
Everything's obvious in hindsight. Bitcoin, right? Look at this 1.1% range for the last 1, 2, 3, 4 for the last like 10 hours, and then before that 1.7% range. Can you imagine if we just kind of did this now? Obviously FOMC, but imagine if we just did that.
Was it Drucker who said that the next 10 years of markets is going to be sideways, and the investors are going to see like no material gains or losses? It's just going to be pure 10-year sideways job.
It could be because if we go back to the 1970s, I need a different chart. Bear with me. If we go back to the 1970s, this should have it. Let's get log on. Oh, can you see that little box on my screen?
Which one?
The one that I've just moved. No. Okay,
No.
Okay, let's get a monthly chart up. So in the 70s, we did have a decade of sideways, and we absolutely could have that again. Because I mean, look at that. From 1966 through to 83, we were stuck sideways. But again, it's one of them where you could have still made money in that. It's still, the range was, let me see.
So it's what, 50 was 2x, isn't it? 50% down.
Yeah, and then it'll be 2x up, won't it? Something like that. You could have still made money. Yeah, that is max pain, isn't it?
Yeah, 50%.
And yeah, it's like historically, when inflation has got as high as it is now, I don't know can't remember what the stat is, but it's like it hasn't come down for 5 years.
Well, this is the thing. It's like, if you want to curb demand, you've got to affect people's pockets. And to affect people's pockets, what do you do? Like, I mean, if you're talking about like interest rates and mortgages, like that takes a long time to cycle through. Like people have signed up for 5-year deals as an example, like 5-year mortgages. Well, you've got people who have probably got 4.5 years of that left. Like they're not going to be affected for fucking ages, right? Like I use it as a probably tailwind example, but like these things don't change overnight. And the same with company borrowing costs. Like companies are borrowing, a yearly renewal, maybe, but most my previous background are 2 to 5 years. Do you know what I mean? Like your facilities and your interest agreements, like it's going to be months, years, etc. before they really start kicking in and companies start going, well, we can't afford to do X, Y, Z. Our capex costs are going to just reduce because we can't fund it. We need to worry about cash flow more, yada yada yada. Like it's going to take time. And I think that's the bit that a lot of people don't get. I know people that lumped a Range Rover on their mortgage because the interest rates were so low. Like that kind of behavior should tell people that something is wrong with the fucking system and that cash is too cheap to own, basically. Like, it's strange. And that's kind of how I justify some of the macro stuff, which I'm never going to be an expert at, not ever. It's just like real world examples where people had too much money, could spend it on too much shit, and wonder why inflation's high because money was basically free. Like it's bizarre.
So in other words, we're completely fucked, Charles.
Well, let's gamble on some Ponzi, shall we?
I completely agree. I mean, sometimes you've just got to call a spade a spade. And I think there's two camps of people, especially on the kind of TradFi side. People calling for a melt up, saying that the end of the world is the bullish case, and saying that all-time highs are coming. And then obviously you've got the doomers, the turbo bears. I think it's not in conditions like this, it's not wise to allocate yourself to either. I think we're in a new regime. I mean, like you said, with the cheap money. I mean, that's over now for the foreseeable. I don't think inflation is gonna come back down to the 2% target anytime soon. But at the same time, if we're looking short term, that doesn't mean that the markets can't rally. You know.
Oh, 100%. And the market's a reflection of psychology and perception, right? And if the market thinks that everything's priced in, then up we go.
Absolutely. And I think this is a bear market rally until proven otherwise. And considering everything that the market's taken into account the last 5-6 weeks, it was just peak hawkishness, peak bearishness down here. And with all the jobs market is still fucking strong, which you talked about dampening demand down. That's what kind of the Fed's trying to do, because you destroy demand and inflation comes down, but the jobs market, labor market is still strong, which isn't what the Fed want. But I mean, despite everything, equities are making higher lows and higher highs. And I think betting on continuation of a trend is usually what you want to do, isn't it? I know the wider trend is up, but I think if we break down here, make a lower low, rallies are absolutely for shorting, and we go back down. But yeah.
Yeah, so play market structure.
Yeah, so we are fucked, but we're in a range down here. Overall downtrend. The downtrend is very clear, but doesn't mean we can't rally. You know, all we can do in the market is manage risk. You know, no one knows what the market's going to do, and being right isn't actually the most important thing. It's managing risk and it's surviving when you're wrong. You know.
Yeah, 100%.
Obviously, being right is advantageous, but if you so many times in my kind of trading career, I've been right. I've been dead on the money and ended up losing money. And then other times I've been wrong, but because of aggressive trade management, you come out unscathed, you know? So the only thing we can do for longevity is to manage our risk, make sure that if we're wrong, we don't get fucked.
Yeah, 100%. So what would make you go balls deep back into crypto and absolutely everything again? Like, we've obviously seen like huge liquidation events like a couple of months ago, Celsius, all that kind of drama, 3AC blowing up, yada yada yada, contagion. And would you want to see something like that again for you to then go, right, this is it, now it's done. This was the COVID lows type equivalent. Would you balls deep at that point, or are you just looking for stability? Are you looking for macro indicators? How would you go about it? Or are you just going to be slow and steady?
Yeah, I mean, I've no idea, literally no idea about what would make me go balls deep back in the market, saying that high time frame bottoms in. I mean, if inflation, we've got CPI next week. So if inflation comes back down to the 2% target overnight, then we can talk about it, you know. But yeah. I think, I mean, with crypto, I mean, is bottoming, is it in? Probably isn't. But we did see, like you said, we saw incredible amounts of forced selling, true capitulation. One thing that got me kind of bullish down here was the fact that equities nuked further and Bitcoin held up. Now, for me, that was a proxy to say downside is limited short term. And obviously, when we had these big wicks, yeah, that was my signal to try and get balls deep long the market. But again, Bitcoin likes to fuck with us. It likes to underperform equities and then outperform them on different occasions. To be fair, uncorrelated Bitcoin is the best Bitcoin. When Bitcoin doesn't give a fuck about anything, it's just got a hella spot bid. It's going up no matter what. The dollar doesn't matter. Yields don't matter. Equities don't matter. That is the best Bitcoin. But yeah, again, to answer your question, I've no idea. Bitcoin's seen capitulation, but it doesn't mean the lows are in. Until inflation comes down significantly, I think it's best to be careful and protect your money, because we could see 10 years of sideways. We could see a forgotten decade or a lost decade like we saw in the 70s. It's a very real possibility. So yeah, I'm just playing the market for what I think's happening day to day. But at the same time, I'm ready to flip. Like if I think that my kind of thesis for going higher is out the window, then I'm going to short it to the ground, you know?
Yeah, no, that's fair. And I think that's one of the things that I struggle with at the moment, like personally, is holding positions for a long time despite having good positions on strong altcoins, and also looking for shorts, because looking for shorts at the lows kind of down here, it just I'm like 90% long at the moment in terms of my actual trades that I'm taking. So
90% long, your wife must be happy.
Yeah, or very disappointed very frequently. Depends how you look at it. But yeah, I just the shorting down here, unless we re-accept back into pretty much the range that you drew and that I had, that for me is probably a free short, and the ETH, the way the ETH looks, is potentially a reasonable setup. But yeah, I'm not actively looking for shorts. I'd just rather ride strong alt rotations personally, and just in and out the market like a cheap hooker, fully protected, get your job done and get out.
Yeah, no, I completely agree. Sleeping when your balls deep long the market is fucking horrible. Like it's the slippage, man. The slippage. I'll never be all right with it, because it's like, oh, you put your stop there. Like, oh, all right, I'll lose this amount. But then if it's like if you get a strong move through the zone, then you're gonna get slipped loads and you're gonna lose a lot more money than you should. So yeah, I agree. Holding positions, especially when your ball's deep long or short overnight, it's awful sleep.
Yeah, and I think that's probably one of the things that I'll just quickly illustrate on here.
You wanna take control of the screen?
Yeah, no, I've done it, mate. These skills are right here to pay the bills, right? So I'm sure that you're all familiar with liquidity. Like, this is obviously shit 'cause it's a Bitfinex chart. Let's go to Binance. I'll just delete all my crap off. But what happens, particularly during events like FOMC, is you've got your let's do buy your order books, your buy and sell walls effectively either side. I'm sure you're all kind of familiar with the concept of all this liquidity up here, all this liquidity down there, which looks a bit more like this. If you've looked at those kind of charts, well, what happens is during volatility events or volatile events that are very known, is the MMs just step away. There is no liquidity either side, and so price just goes like that, up or down. So if you've got a stop here, a stop market there, by the time it's fucking triggered, price is somewhere up here, and you've just got massively fucked. So people thinking that they're safe and that they're gonna get, they're gonna sell their 100k of Bitcoin, or buy 100k Bitcoin if you're shorting it down here, there you'll probably end up getting most of your orders filled up here and losing a lot more than you planned to. So that's kind of one of the main reasons why I don't like. Well, I'll quite happily have a little dabble, but with very small size. And if you trade on certain exchanges, it can be very, very slow to get your orders through. But yeah, just a word of warning. I'm sure you all know that already. But yeah. Someone's asked what MA or EMA is that for your chart. I think you said it was an SMA something.
No, it's the 200 EMA.
Oh, 200 EMA. Oh, okay.
Yeah.
Yeah.
Yeah, I love it. I think using the 200 EMA is, I don't know, you can use all sorts of different moving averages and all sorts, but I just think the 200 across time frames is just it's good to know where the market's at, because I mean MAs, they're not always 100% kind of actionable and stuff. It's just a gauge,
Yeah.
just a gauge on the market.
I mean, I know a lot of people who use them very effectively, and whether it's high time frame or low time frame trading, simple crosses. So, like, I'll just flick back to mine actually. And one of the indicators that I coded up a while ago was Trader XO. Trader XO is like simple cross. It's just a 1225 cross. But you start looking at that, and you start looking at it in trending markets, and it will probably outperform like 80 to 90% of crypto Twitter. Do you know what I mean? Just it's so Billy basic, and on high time frames, it actually gives quite clear signals for trending environments, which crypto generally is a trending environment. Although people say that price spends 60% of the time ranging, and 40% trending. I actually think it's much higher for crypto generally, and alts and alt rotations. But yeah, I'm quite an advocate of simplicity, to be honest, because people tend to overcomplicate things quite a lot of the time, and
Yeah.
I think a lot of boomers in TradFi use simple EMAs, don't they, just to add context to their trading.
Yeah, absolutely agree. I mean, you can look at as much as you want to give yourself an overall feel of the market, but when it comes to execution, you've got to simplify it, because otherwise it is just a recipe for disaster. And like you said, some of the best traders I know use very, very simple strategies. I mean, like for me, I like mark out some levels. For example, I primarily trade Bitcoin with leverage, that is. So I watch Bitcoin, the S&P, and like TLT in the dollar and stuff like that. But if I mark out a key level like here, 3820 on the S&P, and Bitcoin's holding up well, it's as simple as like if S&P touches that, I'm already long. But if S&P touches that key level and it holds and Bitcoin's holding, then that's a bit of a trigger for me to say Bitcoin might go higher. It's really important to simplify execution, because the worst thing you can do as a trader is overtrade. Get in and out of the market all day, slippage fees everywhere. Simple execute out what works for you, because what works for me isn't going to work for the next person, and what works for them isn't going to work for the other person. So it's just a big case of trial and error and losing until you kind of get sick of losing.
Yeah, no, I mean, I agree. Like, I always say that I've probably learned from like 5 people, and taken like parts of their styles and bastardized every single one of their trading styles into something that fits me and my personality, and the fact that I get bored quite easily, and I want to invest in projects, I want to hold spot bags, I want to swing trade, and I want to trade intraday, which is like a really weird combination, because most people just want to do one of those 2 things, or one of those 4 things, sorry. But I kind of want to do it all, and I don't mind being like a jack of all trades, if that makes sense. And it served me really well the last bull run. But yeah, it's a very different approach than I think any of them individually. But it's like what suits me and my thought processes. I get a lot of invalidation from ranges, levels, and all that kind of stuff. I get a lot of signs from momentum, so RSI, AO, all that kind of thing, and a lot of like insights, or actionable insights, I should say, from relative strength, which yeah, there's a lot more to it than I think people realize. But yeah, adapt your own trading style, I guess, is the key message, isn't it? I'm just flicking down the list of alts at the moment, and just everything's fucking red. Everyone is just risk off into today. It's hilarious.
Yeah.
But yeah, I mean, are there any questions from chat or anything like that? So I think we've been going for like an hour and a quarter, and it's probably time for like 10-minute Q&A or whatever, 13 minutes maybe, unless you've got to shoot off, because I don't think we agreed a finishing time. So if you've got to run, then you've got to run. But
yeah, I think it's coming to the end, isn't it?
yeah, mate. Yeah. So has anyone got any cues? How does perceived IRR affect the market's movement? How do you trade it from a game theory perspective? I don't personally use like perceived IRR. I will look at trading opportunities like as I see them in the context of ranges, in the context of like the Bitcoin trade, for example. Trade theory being that I deleted all my levels and stuff, but trade theory being a continuation trade, and it didn't play out, or quote unquote isn't playing out so far. Most likely waiting for the news today before resolution either way. But yeah, I don't think in a way that says, what will other people be doing and how they be positioning into it. I'm more interested in what they're actually bidding. I don't know. How about you, CRG? How does perceived RR affect the market's movement?
Perceived risk to reward?
Yes. And how do you trade it from a game theory perspective? It's quite a difficult question, I think.
Yeah, no, great question. What do you think is meant by perceived risk to reward?
I presume it's sort of when we were talking about, okay, well, we're down, 30, like altcoins are down 90 whatever percent from their all-time highs, and they're now like a 30x back to all-time high. So your perceived RR, like you were talking about earlier, is, it's technically zero. In terms of you're 100% write it off, but you could make a 30x trade if it goes back to RR. And if it goes back to all-time high, and is there like a game theory perspective around that, I think is the question. And, I don't operate like that. I don't think about what others are perceiving. I look at the charts and I look at momentum. It's kind of...
Yeah, no, it's a cracking question. And to be honest, I don't really know. Haven't really got an answer, but I think it boils down to each individual person, the perceived risk to reward. Like, for example, some of the altcoins that I'm holding, like I personally, number one, like you got to analyze the actual project, like what adoption do they have, revenue, are they going to survive in the years to come, and compare that to kind of the market cap. And it's down to you as a person. So if you put, let's say, use that example again, if you put $1,000 into an altcoin now, and you should only really do that if you don't need it for the next 10 years, or for the next 2, 3, 4 years. If you're investing in altcoins now when inflation is so high and we potentially do have many years of low growth and sideways action, you need to be financially prepared to A, lose that money, and B, lose that money, So it depends. If there's someone who's kind of got a couple of grand and they're desperate to make money, and they don't have the patience to wait and maybe average down and kiss the money goodbye, then they shouldn't really be investing in a risky asset class, Probably hasn't answered the question whatsoever, but that's what came into the end.
Yeah, it's quite a difficult question, I think. Do you know people who tried and didn't make it on second cycle? Yes, I do.
Yeah, I do too.
It's the short answer.
Yeah, I know. I mean, sorry.
Go on. You go on.
I was just going to say, I know many people who have tried the hand at trading and tried it for 6 months to a year and just finally gave up. I mean, the simple fact that kind of engagement is so low, most people have quit. And I think time in the market beats timing the market over 5 to 10 years. So if you are still here, you are still grinding and focusing and paying attention. all you got to do is just be here when the bull run next starts and manage your risk, whether that's in 6 months, a year, 2 years, you know.
Yeah. Yeah, no, I kind of see what you're saying. I just it's interesting, isn't it? Like the people, I think greed. I mean, there's someone I know who put about 30K in and rode it up and down the first cycle, and then rode it up to 500K, I think he said, in the second one, and wanted that $1 million milestone, despite the fact that he was very young, and that would have made a huge difference to like his life choices and all that kind of wonderful stuff, and freedom basically. And yeah, rode it back down to 100K, which is still a really good return, right? But you would have thought after like the first cycle and given the amount, yeah, you would just take a reasonable amount out. So just because you're here for 2 cycles doesn't mean you're guaranteed to, quote unquote, make it, whatever that target might be. If your target is 30K into 100K, then, he did it. But yeah, you're not guaranteed to make trillions of dollars out of every cycle, no matter how many cycles you're in. And I know someone actually who messaged me. It was someone who's been here for 10 years, like basically since the start of crypto, and still hasn't made it. So yeah, it's no guarantee of success.
That's pretty impressive.
Yeah, I think that's quite impressive, and I think that's probably the exception to the rule, because I don't know how you don't make it if you bought your first Bitcoin at like $20 or something. But there we are.
Being crypto for that long and not to have made it so that you're comfortable, that is hella impressive.
Yeah, I mean, just beyond, because they did everything as well. They got into NFTs, they got into DeFi at the right time. They just then end up gambling it and just end up high leverage longs at the top and ride it back down to zero. It's phenomenal. But yeah, why no Jim collab? What? I've collabed with Jim quite a few times. But yeah, maybe we'll have Jim on a stream at some point. What do you think could be the next capitulation event? Miners, maybe? Yeah, potentially. I mean, energy prices and all that kind of wonderful stuff going tits up. Could be. I don't know enough about mining and the cost base, the revenue streams. Well, obviously, the revenue stream is selling BTC, but I don't know how dependent they are on it.
Yeah, I've been hearing about miners capitulating recently. Obviously, the hash rate is, people are making comparisons of the hash rate to 2018. I have no idea if
Yeah.
that's a legitimate comparison, but a lot of mining stocks are getting destroyed. So that's a potential headwind for Bitcoin that might cap its upside. Again, there's a million different things that you need to take in, that things to take into consideration. But if you think too heavily about them all, you get analysis paralysis,
Yeah, no, 100%. 100%. And yeah, I think it's just one of those things, and it's like, how do you time that? How do you time that, and how do you take that into account in your trade thesis decision and validation, etc.? Like, I think this is going to happen at some point. Might happen in 6 months, might happen in a year. Like, are you going to be crippled until you get some healthy balance sheets from, from all of these mining companies? Like, yeah, it could be, but I don't know. I don't know how I can factor that into my decision making. Let's have a look. In it for the tech and friends. Yeah, hello, and that was a meme I posted the other day. It's great. Oh no, Jim's live right now. Well, I timed this fucking terribly because I'm piss poor at organising things then. Otherwise, I'd have hosted him. The big minor strat is pretty much borrowed money and sell higher up. Yeah, I mean, the sailor strategy. Aside from price levels, how do you mark your invalidation? What other indicators do you use? That's a good question. I like that. Do you want to go first?
Yeah, cracking question. How do you manage invalidation? Good question. I think it comes down to the individual person and what they deem is invalidation. So let me get a clean chart here. Bear with me a sec. Oh, how do I move this thing? There we go. So clean chart. So take this down here, for example. When we had this SFP, so it was a cracking setup for me because we were near the golden pocket and we saw the wick down. Now, if you get a wick down like that, that shows demand. It shows there's a lot of demand down there. So invalidation would be here. So if bulls, if that wick down, which showed a lot of demand, if bulls were again, if bears were able to push it down past there again, then they're too strong, and that shows invalidation. And again, yeah, good question, because I think it depends on different time frames. Depends on a lot of different things. Like, for example, something that I like is the EMAs are now trending up, on quite a few different time frames. Let's see what they're like on the daily. Yeah, trending up a little bit. This one's yet to trend up. So someone might have an invalidation of, I don't know, if they break below, but some people might think it's a deviation and the MAs might still be trending up. So invalidation might be to wait for them to trend down. I mean, there's a million different things you can use as invalidation. That's probably a really shit answer. Sorry about that.
No, it's good, mate. I get what you're saying. The interdependencies of everything, so you can invalidate off for multiple reasons. Like you were talking about the dollar earlier, DXY strength. Okay, DXY is strong. I'm going to risk off any positions I'm in. Doesn't matter whether it's invalidated yet or not. Do you know what I mean? You've got a proxy and a different trade trigger. That's fine. Off you go. I'll talk about mine very quickly. I'll just flick this up. And mine are very different depending on the trading styles that I'm using. So, with BTC, I showed you earlier at the start of the stream that it was something like, I've lost my actual entry and all that kind of wonderful stuff, but it was at the top here somewhere. And yeah, that's probably about right in terms of entry and potential targets for, a move upwards. Like, sometimes I will just play high time frame ranges and I will just do the normal kind of invalidation that you see on Twitter, which is long here, stop there, right? Sometimes. When I'm doing lower time frame things, particularly around relative strength, then my invalidation is much, much, much more dynamic, and I will use pretty much whatever I can. So I longed Doge in here very aggressively, and was part of trying to force this move up. And literally, my stop for that trade was basically here. So it was, I want to see that continuation. I want to see that push up. We had good volume coming in. We had strong relative strength move up here, and my stop was down there. And I don't have a specific target, right? So I'm not just going to go for that. What I wanted to do was ride it up for the next leg, and sometimes you have to be aggressive in that positioning. So it depends on the trade style, the trade setup, what you are looking to do. On a high time frame, it's very easy to have a clean invalidation. On a low time frame, if I'm seeing relative strength, strong bid, I can mark it in a little bit and start building a position, and then managing and executing on that position is a little bit more dynamic than just a hard, like this. But this is what I had in my head. If we start moving down and we close below that, I had a hard stop down here, which would have slipped quite hard probably. But yeah, that's me on invalidation.
Yeah, no, well said. And just to kind of add on to what you said there, I think when it comes to day trading, I'm a big fan of not letting profit turn into a loss. I think across the board, that's the biggest reason why most traders are unprofitable, because they don't take profit when they should. So if kind of there's a trend day to day, or sorry, an intraday trend, I think you shouldn't just get your stop loss into profit as soon as possible. You should let winners run. But if there's a strong trend intraday and you're just day trading, aggressively moving your stop up with the trend is a good way to protect profit. And that's got a lot to do with invalidation. Because if I think about the amount of times in my kind of trading career that I've let winners turn into losers, it's far too many. I think that's one of the biggest reasons why people lose money. So I think, like you said with Doge, you've got to be dynamic. And sometimes if you see money, you're happy with it, you've just got to take it and close the screen.
Yeah, and I think this is where journaling comes in. So I use a bit of software called Trader Make Money, which you just whack an API in, and there's probably loads of them out there, right? So I'm not affiliated with them or anything like that, but I use that, and what I've been noticing recently is that I close my trades too early, and I noticed this sort of in my review back here, and the process of reviewing your trades and understanding like where did you close? Why did you close? Are you closing too early? Are you closing too late? A while ago, I had the kind of opposite problem where I was just holding for far too long, and it's balancing that to the market conditions that you find yourself in. So, I adjusted it sort of back here, and one of the trades that I'm not to say proud of, but I'm happy that I changed that behavior because I got a really good long on sushi down in here, and I managed to ride it up to, I think it was up here, where I closed, and that was it. So, identifying the behaviors in the market conditions that you're in, reviewing it, and understanding where you are strong and not. One of my main strengths is that as soon as I'm wrong, I size off very quickly. So I am very good at managing when I'm wrong, but I'm not as good at managing when I'm right in these conditions because I'm so kind of risk off, if that makes sense. But yeah, that whole plan, do, review process of journaling, like people think it's a fucking chore, and to be honest, it kind of is. But it's where you find out the insights about yourself, and you go, okay, well, this is the adjustment that I want to make in my trading. And once you've made it, you can start seeing it, hopefully, in your results. So, yeah.
Well said, absolutely. And that sushi chart you've got up there, whatever time frame that was, I'm just looking at it on my phone. You could very easily, like on that little, I think it's that little pump there you had up on the left.
This one.
Like if you raised your stop at every high or low and you kept doing that and then you got taken out, that would have been a hella profitable trade. And then the psychological point comes in because you raise your stop all the way and it's a great trade. You get taken out and then you shut off for a while and let the market do its thing. And then you go back into it with another plan. Psychologically, that's pretty healthy. Whereas if you hold on to it too long and it comes back down and you see that your account was this high yesterday, but overnight it's gone back down here, like the psychology comes in. You think shit, you think to yourself, I've lost money, even though you still, it's a winning trade. And then you might add on, and like that, the trend might shift. So it's absolutely down to the individual, what mistakes they're making, and you can learn that through journaling as well.
I'll give you a piece of sauce as well for the stream, a little piece of sauce for today. So one thing that I did that helped me massively early on is, let's say like my trading balance is $10,000. So I put $10,000 in a sub account on FTX, and that is my trading account. Now, after a day's trading, I'm at $10,800 or whatever it might be. Amazing. What I used to do is take that $800 and move it into a profit account and just leave it there. So two things: your accounting becomes very simple because all your profits are elsewhere, and you're managing your kind of position size. Now, you don't scale your portfolio quite in the same way, obviously, but if you have a comfortable amount of capital relative to your living costs, it helps manage your psychology around that whole this was my balance yesterday. You know, yesterday I was at 11 grand. Now I'm back at 10.2. What the fuck? Okay, I'm 200 up, but I'll just make one more trade and I'll make it. Oh no, I'm at 9.8. Oh no, I'm at 9.7. Oh shit. You know, yeah, that helped me a long time ago. Now I don't really care so much, but yeah.
Love it, and definitely agree. Taking profits, and like you said, moving them out of your account or portfolio over time. That's going to build up, you know.
Yeah, the only downside is you don't compound those, but it's, you know, horses for courses, isn't it? And it's up to you how you want to go about things. But yeah, that helped me early on, particularly when I was kind of trying to get around the trading process and trying to master the process rather than focusing on profit.
Absolutely.
Yeah, cool. Well, thank you so much for coming on today, mate. We've chatted for an hour and 40 minutes, and it certainly hasn't felt like that. I've learned quite a bit about stonks and uranium.
Uranium. Oh,
Yeah.
gotta love it.
Balls deep in uranium.
Yeah. Still, I've got my my entire pension in the uranium market.
Yeah.
So hopefully that does well. But yeah, no, thank you very much for having me. It's been a pleasure. Thanks everyone for listening, and let's hope we don't lose too much money later today.
Yeah. Keep an eye out for volatility, and I'll dump your Twitter in the chat. Amazing tips. Both spotted the psych issues for me. Great profit taking strategy generally. Sounds like a confluence of factors. Yeah, mindful of your own psychology. Yeah, journal your mood as well. So journal, you know, how you're feeling when you're taking trades and all that kind of wonderful stuff. Yeah, thank you very much. Go follow MacroCRG. If you like the stream, I'm just going to be cringe now. I'm going to do it. I'm going to go for full shill. You can click follow, and then you'll hear the wonderful voice of Michael Saylor, which I don't normally tell to people because I just want people to think they're going insane, and that they're hearing there is no second best in the background. But that's actually the someone followed the stream trigger. I'm going to start doing a few more of these streams, having guests on, chat to them about various questions, whether it's their areas of expertise, like I think we've got a couple coming up with like Trader Skew, maybe, hopefully, and various other people. And what I want to do is share some of my like weekly plans in my Telegram channel and maybe on stream, if I can be bothered on a Monday morning after my Nescafe Gold blend. So yeah, that's kind of what's coming. I'm feeling a bit pumped actually for the market and for trading at the moment. Now we've got volatility. I hope Big J Power doesn't nuke it later. And yeah, stay safe everyone. Don't degen on 20x leverage. And catch you soon. Cheers again, MacroCRG, for coming on. Go follow him, and peace.
Cheers, guys.
He's BTC Charlie with his linguini charting. He loses sometimes, but hardly. He's BTC Charlie. But now he's GBP Charlie. It doesn't matter what he's charting. His trading is tough, but it's not all that bad with Charlie. He's got memes in the morning and more in the evening. It's Charlie. And when trading gets hard and support starts to lean, search Charlie.